Righty-ho. So there is lots and lots of doom and gloom going on at the moment, that the world is going to end financially and possibly in other ways as well. All very depressing. And if you go onto YouTube, this one, oh, it's Mr. Kiyosaki again. There was a comment under one of his videos the other day that he said he's accurately predicted 2 of the last 100 that he's predicted. His prediction rate is not very good. He seems to have lost the plot in recent years, this Mr. Kiyosaki. But he's talking about a crash and how bad it's going to be. And there are a lot of commentators that are thinking the same way. And I've been thinking there's going to be a crash for the last 3 years and it hasn't happened yet. But I have managed to make money by being in diverse asset classes, catching the right cycle at the right time. I do think that we are due a bigger crash, and yet I did buy some stocks this week. I've got a new, very interesting stock system that's paying out. I just got my first dividend payment after 10 days, and my dividend percent was the best one. I just put it on Telegram. I just can't remember now. I think the average return is about 3.3% dividend in 10 days on mainstream stocks in a different way. So it's all very interesting and very exciting. And I have been spending weeks and weeks going through all of this. And I've opened a live account. I've allocated $10,000 for it. So far, I have invested $5,500. It's high risk, it's high yield, very interesting, very exciting. Not something that you would put your house on, but just part of a portfolio. And it could turn out to be a very good investment, and I'll briefly cover that at the end. And then on a more serious note, you've got Ray Dalio. Ray Dalio was the head honcho at Bridgewater, literally went from dirt poor to being a billionaire. He has written a book recently that's just come out. He's talking about how everything goes in cycles, and he's talking about when the cycles go through, how the final part of the cycle is a war. And if you live in the Eurozone at the moment, oops, that was rather pertinent. Just come up with an ad for a war game. The last part of the phase is a war. And in Europe at the moment, the warmongering politicians, many of whom are deeply unpopular with their electorate, seem to be wanting to pick a fight with Russia, and they haven't got a they've got the equivalent of the Boy Scouts in terms of fighting forces that are ready at the moment. And why the hell do they want to get involved in fighting Russia in the first place? So there's a lot of nonsense going on, and it could well be that there is going to be a crash. So what do you do? And one of the things you could look at, this is JP Morgan. And JP Morgan say that instead of trying to time the market and get in and out like we do, and just leave your money in. So somebody sent me this the other week, and I said, well, as ever with all of this, check the dates. Anybody recognize any significance with either of these dates? Why would JP Morgan say, don't worry about the stock market crashes, just put your money in and you'll always make lots of money. And by the time you're 60 or 70 or maybe 80 in the future, because the dividends are reducing every year, you might have enough to buy a breakfast once a week. Why would JP Morgan? What's the significance of that date, anybody? I'll have a quick sip of my tea. No takers? Well, 2003, I had been in stocks. Yes, Indy, excellent. Indy says 2000 to 2002 was nasty. And so he's quite right. This was what happened in 2001-2. I was in stocks in the dot-com boom and made a lot of money, and then gave a lot of it back, because in those days I was young and foolish and naive and thought it was going to go on forever. Stood me in good stead more recently with crypto and gold and stocks and everything else, particularly crypto, as you know, getting out, taking the stake out, taking profits out along the way. So this was a crash in 2001, 2002. So JP Morgan decided to choose this date. You will also see a lot of these big companies will choose this date, because after a 50+% crash in the stock market in 2008, guess what? It started to go back up. Took 5 years to get back up, but that's the date that they often will use. And the UN did it recently. They had a paid scientist to come up with a report on global warming. And the scientists came back with a result, and the UN didn't like the figure because it didn't fit the narrative. So they went back and said, pick another date. And there is an Aussie professor that's regularly on the telly. I don't think he's on the telly in Australia because they probably banned him, but he says it's all nonsense, and he always says always look at the dates. So yep, well spotted, Indy. So JP Morgan, just put your money in the S&P. You'll always make a load of money. You'll be able to retire when you're 50, 60, 70, 80. I say, and Goldman Sachs came out the other day. They're talking about reducing dividends as well. The issue is, of course, if you are trying to, well, if you're trying to build wealth, and I did another podcast the other day with a young Canadian guy who's in his early 30s, and he managed to create a portfolio from when he was at university. And yes, he's got it up to 300,000 now, but it's still not paying out a fortune in dividend. And anybody starting now, it's getting harder and harder. And let's face it, if you're starting now and you're at this point of the equation, which we might well be, that is a terrifying situation. And as I said to anybody before, if you've been coming up to retire in 2007, 2008, and you've $1 million in your pension, well, 9 months later, you've got $500,000 in your pension. And believe me, you were not in a rush to get back involved in this. I thankfully missed this period because I had been in gold from 2003, and I'd bought gold on and off, but I was generating my income from forex trading. So my focus was on forex trading and trying to grow my account at the time, as well as trade for clients. And therefore, for me, thankfully, I wasn't in stocks at this time. I was in gold, and gold dropped about half the way, as I've shown you many times before. This is, if you were too young to know, or you didn't really understand what went on, this is a good article. I will share this in the recording. But this also shows you that when the crash came, it wasn't usually with a crash, things come down quickly. There is an expression that I forget, but basically when stock markets are going up, they go up nice and steady, but when they come down, they come down very quickly. Well, this crash took 1 year and 4 months. So how many people were trying to buy the dip? They bought the dip here and then it broke again, and dip here and dip here and dip here. So unless you are actively trading and getting in and out, then the chances are you could have lost a substantial amount of money, and you would have been very, very, very reluctant to get involved again because you've just seen your net wealth be absolutely gutted by the financial crash. So, and lessons learned and all the rest of it, there's so many things going on at the moment that are still the same. There's a really good movie, if you've not seen this, and you can get hold of a copy of this, I think it was on Amazon recently, called Too Big to Fail. And what's also relevant in here, it makes you realize some of these big companies that were at these meetings to basically on the Friday Lehman's, I think Wednesday Lehman's are gone, at the close of business on the Friday, there was a serious concern that the American and therefore world economy was going to collapse. And therefore the government, I think it was Ben Bernanke and the Treasury Secretary, etc., were in with the heads of Bank of America, JP Morgan, all of these people basically trying to carve it all up so that when the markets reopened on the Monday morning, there would be some kind of stability. Also gives you a clue why some of them seem to be Teflon coated, that they're the head of organizations that have paid billions and billions and billions of dollars in fines for malpractice, and yet the top of the companies are still, hey, they're still happily wandering along. So how long do bull markets last on average, and how long do bear markets last? So I asked ChatGPT this morning, and ChatGPT says on average a bull market lasts approximately 4.3 years. Well, really, we've had a bull market going from 2010, we had a minor blip in 2018, we had the COVID crash in 20, so that was a very long bull market. And then the average bear market lasts around 11 months, but we've just seen it took 5 years to get back with the crash in 2008. So then I read this article this morning. This is in the Financial Times, and it's saying retail traders have bought back in on the latest dip, but the big boys are not. And therefore 70 billion has gone into US stocks this year, even as professional money managers are slashing their exposure to the market. Some are going to China, some are going to emerging markets, some to gold, etc., etc. So these are all clues of an impending crash that retail usually gets screwed. And yet I bought some last week. I bought some of the FANG stocks, which I have resisted thus far. And my thinking is as follows. I bought NVIDIA here at 110. And as ever, I only ever buy a stock if I can get at least 25% out of it to the recent high. And I have bought Google. I think long-term Google will survive all of this. I bought some Palantir. I bought Palantir at 85 bucks, I think, and 85 bucks still has the potential for 45% back up. Meta was scraping. I think Meta was only 20%. Caught it almost to the pip, which was perfect here. I think I showed you this last week, guys. 26% Nvidia. We just looked at Microsoft. I bought some Microsoft as well as. However, I did not bet the farm. Oh, Microsoft is the one that's struggling. And then Amazon. And I bought Amazon. I started looking at Amazon. I think I bought a 206 and 192 from memory. So I'm in here with Amazon. I think, well, the most important thing is this is not financial advice. This is my own decisions. I only put in less than half the amount I would normally put in a stock because I'm planning that if we get a further break, I would be looking to buy on a significant pullback. And as you know, I have the COVID low on all my stocks and charts as well anyway. So if we get a serious crash, then I have cash sat there waiting, aka Mr. Warren Buffett, on a much smaller scale, that if it all tanks, then I will be covered, I hope. I did not buy any Tesla. And Tesla did rebound yesterday, but I was talking about this for the last few weeks in the live trading sessions. We knew anecdotally that in the UK and Europe, the sales of Tesla were falling, and compared to the previous year, they are down 40%. There's also obviously the problems in America at the moment with people, lunatics going around vandalizing the cars because of their opposition to Doge with Musk. So for me, I didn't buy any Tesla. I have on this new strategy actually bought a bit of Tesla and a short on a Tesla to counter it, and that's something to go in at a later date. Anybody any idea why Bitcoin went up yesterday and therefore crypto rebounded as well? We had a nice bounce on Bitcoin, and we also had a nice bounce on MicroStrategy, which is the Bitcoin related stock. That was my best stock buy ever last year. So why did that move up? Anybody know? What happened yesterday to kickstart the crypto world, and particularly MicroStrategy? Nobody? Yesterday, Mr. Saylor's lot, MicroStrategy, now rebranded as Strategy, announced that they had just bought another 6,911 Bitcoin. They paid an average price of 84,529 for 584. I always get confused with the numbers. 584 million, and they now hold over $500 million of Bitcoin. And these are the purchases he's done so far this year, and then going back into last year. And I thought this was absolutely nuts. He was buying at 106 near the top, but he's clearly just cost averaged in. I believe his average cost now is around 68,000. So he's still full on Bitcoin nut and turned his treasury to that as well. This is an M2 breakout, guys. This was a break of a trend line and a break of a 55 EMA. I think I bought some more the other week, can't remember. Members of my investing group will know because I put it out on Telegram. Maybe, I know I said that I would be a buyer at 220, 240 and 220 if I wasn't already in. And then other things on here. This is what I look at every day. So I'm looking at the DAXI to see what the dollar index is doing. Looks as though it's turning back down again today. But then again, New York hasn't opened yet. Pound and the Eurozone. So the Eurozone's suddenly going up a bit because the Germans are now going to spend a lot more money, which could be good for the European arms industry because they all want to go to war. Partly it's also because of Trump and the concern that NATO is going to pull back financially because of the lack of the Americans. But Trump did warn Europe about this 10 years ago, and they didn't spend any money, and now suddenly there's no money for anything, and aka the COVID crash, they've suddenly found squillions under the bed. Ashley says Crow also shot up due to some upgrade. And Anton says that MicroStrategy are talking about becoming a bank as well using Bitcoin, which could get really interesting if we could get somewhere safe to actually make interest on Bitcoin as well as. So this was the gap yesterday then in the NASDAQ. So we've had a bounce. And I also bought some NASDAQ, again, with this new method. So all sorts of things going on at the moment, all very exciting. But this could be the same as the pattern I just showed you from 2008. Initial drop, retail get back in, bigger drop ahead, which I suspect may be true. Now, I am also learning at the moment options trading. If anybody is a good options trader, then let me know, and perhaps we can do a little bit of a collaboration. At the moment, I am just doing very simple. I bought a put the other day, and that's about the extent of my activity so far. But to be able to hedge ourselves better than just shorting ETFs and things, options is certainly something you should all be looking at and considering, but be very, very careful. In fact, I will show you in a moment some books I recommend on the subject if you are a newbie. And so watching all of this, we've had the rebound. We still got gold up at a decent high. This was gold, as I've told you many times before. I started buying in 2022. Again, I have been in and out of gold for 25 years. And silver, once again, I explained on Sunday that the first area we would anticipate a bounce. Kiyosaki's talking about the same thing I keep saying is, well, the all-time high on this was 49.50. There is a short squeeze going on at the moment. I posted on Sunday a link to a guy on Substack, Bubble Jesse, the Bubble something or other, explaining how the bullion banks and the hedge funds push this down generally on a Friday as well. So you can actually see on a 1 hour when they're doing it, it's so obvious. This was my best mining stock. Now, what have I done of late to try to hedge myself? I have been buying mining stocks. So the other week with my investing group, we were buying mining stocks again. I have bought some more of EXK at 413. I actually bought some more of this the other day at 470 because I'm cost averaging way down here. And I have an alarm set here. If the stock market tanks, gold will go down as well, which makes no sense if it does the same as last time, but it will recover much, much quicker. The gold and silver in the ground at the moment to me is at a discount because the prices of a lot of these are way off the all-time high, for example, in gold. So have a look at some of the mining stocks. Gold mining works on a kind of a league level where you have the top ones, the Rio Tintos, the Franco-Nevadas, BHP. They're like the Premier League. The second league down, which is where EXK Silver comes in, companies that are producing, probably got research going on as well, but they are ripe for being bought out by the big boys because if they have a decent supply underground, it's very attractive to the big boys. And then the final group of the speculators, they're the ones with the pans in the river, and I don't go anywhere near them because you need to buy lots and lots of them and it's far too complicated. So silver, I've just shown you. Crypto, if you're not familiar with crypto, I am still active in crypto. I caught the market cycle at the right time. It's in the blog, the website. We've got lots of new folks with us. Check out this. This is why I believe in the crypto boom. So when Bitcoin was at 12K. And gold I've just shown you as well. So again, this is this thing about trying to catch the cycle. Now, if the current crash that we've just seen, the little dip we've seen is a mini crash, then what recovers first? And in 2018, 2019 was Trump and China trade tensions and tariffs, and there was a 20% correction in the stock market in the US. And these were the sectors that recovered quickest. So I have got some exposure to some of these. I didn't go for AMD. They've been down in the dumps for ages. But bear in mind, history tends to repeat. So now, my new strategy is using Tastytrade, which I opened an account with last week. I bought this. This is a high risk, high yield ETF. And I bought it the other week. I've actually been watching these for over a year. And when they first came out, I thought they were nuts and it was an insane way and way, way too risky. But as I've shared with the investing group, I have bought in the other day. And at the moment, I have invested 5,500 of the 10,000 and it's spread over approximately 10 different ETFs. And I bought them for different reasons in different sectors. So this one is AIYY. And to find out what any of these are and what they do and why it's so interesting, not under any circumstances financial advice, and it's definitely only something that you can afford to lose. So on here, if you scroll down, you can see the yield for each of them. So if you wanted to have exposure to Tesla, and what they're doing is this is synthetic options trading, all complicated, and well, very, very labor intensive, apart from being complicated, and it ties up a lot of capital. But for example, if you were invested in the Tesla ETF, currently it is paying out 69.78%. Now, I did buy a bit of this because I also bought a Tesla short ETF just to compare the two. But personally, I'm not convinced, as I've just explained about Tesla. So I only went in half on this. But these are the yields they're paying. And Nvidia is 118%. And this is Coinbase, 87%. This is nuts. It's absolutely, utterly nuts. And I say, I've watched it for a year. I've watched various people who've been doing it, but I've had a go. And I actually think that this could be a very good way to make money. And I said the other week in the investing group, I put a thing on saying, look, I'm testing it on a live account and I'm sharing it with members, a strategy that might enable anyone to have a significant monthly income to be able to retire within 5 years. I have allocated 10 grand in a real account with the goal of building it to 100K. So it's crazy, it's high risk, it's high yield, but it's worth having a look at. If you're in the investing group, this is the new course that I've been building for the last few weeks. Go through here. This guy is on YouTube. He's way on. Just buy it. It's nuts. It's insane. You'll get rich. This is a more balanced view of it. And then this is a conventional investor's opinion that probably thinks on balance it's probably crazy. And then I've got in here high yield in action, including my portfolio. And on I put the first tranche of money. It was 3,000, just over $3,000. But it's paid out $104 in dividends. It paid out 2.4% in the first 4 days, and it's now paid out 3.3% after 11 days. So it is nuts, but it's very interesting, and it's worth exploring at the very least. So if you are of a mind that you're willing to take on some risk, and then in terms of options, so for options, these are some books I would recommend if you're interested in finding out a little about options. And this guy, author, is very good as well. He's a former champion options trader, although the results are nothing like you would expect for a stocks trader. But he was an American champion. He seems legit, and there is a website and link and some videos that go with these as well. So if, like me, I do read a lot, but also I like to see things visually, it's worth having a look. And then this is a little bit more advanced. This is to do with, there is a strategy where you can basically gain a premium every week by selling a call. It's high risk, and I wouldn't be doing it. But this is a twist on that. So that if you want to take it a little bit further, or if you know something about options, then that's another book that's worth having a read as well as. So any questions? Oh, hang on a minute. Dan sees, what's the suggested minimum startup capital for the method? You can start at $50, Dan. It just depends how much you want to put in and what the current price of each one is. So for example, what is, how do we find the prices? Well, let's have a look in Tastytrade. So Tastytrade at the moment, so this is AIYY, and I say it's an AI, it's a bunch of AI things. So what you do is in here, if you go in and have a look at each of these and you say, okay, so I went for some high risk and I've gone for some low risk and a mix, and I've gone for different categories as well to try to balance it all out. But AIYY, where's it gone? Here we go. So if you click on here, then it will tell you the prospectus on what it is that it is investing in. It's to do with AI. So I bought a bit of that, and that's the current price for that one. And you can't buy fractional ones. It's a bit weird really, because actually what I've set it up to do is to reinvest the dividends. So it automatically reinvests the dividends, and it will reinvest the dividends fractionally. So you might, if you make $20 on this month, it will buy you 3.9. But when you come to buy them, you can't buy fractions. It has to be the whole ones. And I think Palantir is about $50 a stock, maybe 60. But very interesting. And for me, I mean, to be honest, I was getting bored with forex. Come up to 2019, I'd been doing it for 15 years. I'd made a lot of money out of it. The Australians changed the rules about managing money for people, and I just got to the point and thought, you know what, I'm coming up to a certain age and thinking it's maybe time to leave it. And then I discovered crypto in 2019, which was insane and insanely exciting and interesting, using M2. And then I've used the gold thing for, I said, I've been in gold since 2002, 2003, when the stock market was tanking. So using the same skill set for all of these. The thing that attracted me to this, the issue with this, okay, this is the issue. This one goes back a year, I believe. So the problem is if you've bought in here at 21 bucks, your investment has come down 75%. Eek! This is one of the worst, I think, from memory. So that's terrible. But if the interest has come in is 70% or more, you're still in front. The other side of it is those who have reinvested their dividend on the way down will have accumulated more, which is cost averaging in. The reason I got involved the other week is that I'd watched this on a monthly basis, say since January last year, previous year, and I thought, well, at the lows that we're at the moment, it's worth a go, because the idea that one of the guys I was showing you earlier, the buy guy, he's just like, he's going to hold these forever and it'll just pay his pension and his mortgage and everything. Extreme view. I certainly wouldn't recommend it. But I thought, well, in this case, as they're already down a massive amount, I also have the potential for this to actually make a profit going up as well as. So I kind of think I'm buying them less than half price, high risk, high yield. By definition, that would be the way it would go. In a crash, it will struggle. But I have taken a Tesla short at half risk, and ironically, that was the best dividend, the first dividend I got. I only put 200 bucks in it, and I've got it written down here somewhere, CRSH, $16.15 after 4 days on that one. That was gross and less fees of 242, so around 1375 on 200 bucks. But that actual unit has gone down in value and all the rest of them have gone up. So lots to think about, lots to pay attention to. But if you are willing to take a risk and you're into this kind of thing, it's certainly something that is worth checking out, would be my suggestion. If you are interested in joining the investing group, then if you go to the crypto course here and you go down to the bottom of the page, if you click on here, you will be taken to a sign up page. It's a different site. I haven't even updated the 2024 because it's 2025. I put a lot of work and effort into this, guys, so I cannot afford to give it away for free. But I will put some of this in Mentor Pro in a few weeks' time when I've finished it in here. If you put in here capital letters FMP10, you will get a 10% discount if you want to give it a bash. Anyway, any questions on anything we've covered? Pierre says, on the daily, the dollar index is in a downtown trend. Place a trend line. Price now stuck at the MS2 pivot and monthly 55. I would prefer if the index can go. Yeah. Where I don't bother with pivots anymore. Pierre still uses pivots, old school. This is my dollar yen. Oh, we're now moving below there, so we're up 50 odd. So I'm getting to the point where I want to get this to entry, but not to rush it too quickly, because as Ashley says, this has the potential. This could go 400 pips. So I'm just going to watch and wait with that. This is the dollar index. So I've got a trend line in. I've got the 55 EMA here, which is the weekly. I've got the daily 200, the 55 coming down as well. This is very bearish. This is a downtrend. This is multiple reasons going on in here. And by the sound of it, Pierre's got some pivot points as well. PS, it's nice to join again and hear your young voices, hee bitch. What's the suggested minute we've done that? Tasty's MT4 for USA traders. Oh, I didn't know that, Brad. Credit spreads are safe in options for the most part. Yeah, I did look at that, but that's a bit above my knowledge level at the minute. Dan, I use M2 for everything. The difference is when it comes to stocks and it comes to crypto even, which sounds a bit bizarre, I am predominantly fundamentals first. So I'm buying something that I believe, particularly in crypto, has a real world reason to exist. So for example, I've shared this with you guys before, my A grade crypto portfolio is somewhere in here. Right, this is my main one now. This is the one I share with the investing group. So Bitcoin is the main one. My Bitcoin percentage now did a note the other day. I think it's 65% Bitcoin. It's about 14% Ethereum. Solana has come into it now. I think it's about 4 or 5%. Cardano and Cardano came back from nowhere. It's been to sleep for years and it went up 250% the other week. These are ones that should benefit from Trump. And the moment the SEC have backed off with XRP the other day, so suddenly the legal thing's gone altogether. And Brad Garlinghouse, one of the CEOs of here, and Charles Hoskins, CEO of Cardano, involved as our HBAR apparently in this discussion group for crypto with the US government and the SEC. Does this crash impact the crypto market even more, as crypto alts already quite low? Could do, people, could do. There is a theory that if the Fed starts getting involved and starts cutting rates again in a panic, that Bitcoin particularly could be a safe haven. But thus far, Bitcoin has not. But when you've got the likes of MicroStrategy piling in still, and you've now got all the big money in, they reckon most of these moves now are non-retail. It's mainly the big funds that are driving this. And I'm still happy to be in. And XLM is the last one in here. So these were all ones. This was the one that went up. Was it 500%? I'd sent the telegram out on the 10th of November and it went up 300. I think it went up 500. I never understand with trading view. It varies from one time to the next. No, it says 350% this time. Oh no, sorry, it was HBAR that went up 500%. But these are all M2, so it's all breakouts. This was a breakout from a trend line, a break of an EMA, etc. Always I only buy stuff if I believe it's got at least 35% chance of a 35% move in a very relatively short space of time. And this one, HBAR, went up 500% in 3 weeks. And this was tied in with Trump as well. Ignore these others. These are highly speculative ones. I did buy a bit of it down here. This is to do with the metaverse. Oh, I actually own some of this from before as well. This is to do with the metaverse. At the moment, it's on the back boiler, but it could turn out that this is a very good area to buy something really cheap. I also bought a bit of this the other week, and I can't remember what this one is for. But again, it was down at a all-time low area down here. And can't remember what it does. Dan says, would you say that the new Tastytrade method is more of an option to create income over the volatility of the crypto market in the non-event of the alt season? Yeah, I bought it for income, Dan. The thing for me is, if you look at the top dividend stocks, I think I put it in here the other day, the top dividend stocks now, they're known as the aristocrats. And the aristocrats at the moment now, they're paying less than 3% average. It's dreadful. And so the problem becomes is if you think, if you're fortunate enough, you've got $1 million and you're going to just put it into dividend paying stocks, it pays bugger all. And so the point for me to get involved with this was the attraction of the high yield. This is the top 66 dividend aristocrats ETFs in the US, and the top one's paying out 6.3. That's great. But as soon as you get past the first 10, we're down here. I mean, do you want to really tie up 100 grand in something like this? Because I don't. So that's why I've gone and had a look at this. Crypto, I also get staking. I've got a lot of crypto staked, so I'm getting interest on that as well. And the banks are paying nothing. And at the moment, NatWest Bank in the UK is trying to debank me, I think, because I sent money to Tastytrades and it's US and what's it for and why you send. I only sent 9 grand and 9,250 is the second one to keep under the 10 grand radar. And they've put my account on hold. Thank you one and all for attending. We'll put links to various things that I've shown you today in the blog post, hopefully giving you something to think about, if nothing else. But just be prepared. If the crash comes along, what are you going to do? And if you've got all your finances and everything tied up in the US stock market and it all comes down and does what it did last time, it's a very scary place to be. So, talk to your financial advisor. Think about diversifying more than a normal financial advisor. I don't know what it's like now, but they never used to recommend gold because they couldn't make any money out of it. I have now almost 30% of my holdings in gold, but I buy them via Bullion Vault in the UK. It's stored in a vault in Switzerland, so it's never left. No insurance problems in that respect, no sales tax or anything else, and it's away from the UK government as well. Righty-ho, and Pierre, good to see Pierre as well. See you all next week. Next time, same place. Bye bye.